This is AI Command App News. Here's what's moving markets today. The AI trade cooled this week and Wall Street felt it. After months of hyperscalers and chip makers carrying the indexes, money started rotating out. Investors Business Daily called it plainly. The market is, for now, rotating away from the AI boom. The clearest example came from Micron. The memory maker posted a blockbuster earnings report and still finished the week in the red. When a company beats expectations and the stock falls anyway, that tells you the good news was already priced in. The one bright spot for the broader economy, oil prices sank, which is genuine relief in the fight against inflation. For business leaders, the signal is simple. The era of buying anything with AI in the name and watching it go up is pausing. Fundamentals are back in charge. Story 2, and it lands in your own budget. The same AI boom that's cooling on Wall Street is quietly making your hardware more expensive. The data center build-out is consuming the world's memory supply, and RAM prices are skyrocketing. It's gotten so tight that Apple is seeking permission from the Trump administration to buy memory from CXMT, a Chinese supplier blacklisted by the Pentagon over ties to the People's Liberation Army. Sit with that. One of the most powerful companies on earth is asking to do business with a blacklisted firm just to keep its supply chain moving. Tim Cook has already called Apple's price increases unavoidable, blaming big tech's AI obsession as the 16-inch MacBook Pro jumped $300. The lesson for every business: the cost of the AI race is being passed down the chain, and it's landing on the buyer. Story 3 is about who controls the compute. China just unveiled a supercomputer called Lineshine, ranked the fastest in the world, and it did it without a single GPU. That matters because US export restrictions were designed to choke off exactly this kind of progress. Lineshine is a signal that the restrictions are pushing competitors to build around them, not give up. Closer to home, Alphabet is leaning on its own homegrown silicon as a key weapon in the compute race, reducing its dependence on outside chip makers. The takeaway: control of compute is becoming a strategic asset, and the companies that own their stack instead of renting it are the ones setting the pace. Story 4 is a security story with a geopolitical edge. Anthropic says Alibaba used roughly 25,000 accounts to mine its Claude models and extract their capabilities. Whatever the final facts, the implication for business is serious. Your AI provider is now a target. If your operations depend entirely on a third party's cloud, your exposure is only as strong as their defenses. And quickly, 2 more worth your attention. Ford reportedly leaned hard into AI automation and cut human workers, and according to reporting, it backfired badly. A reminder that replacing people with AI before the technology is ready carries real operational risk. And for investors, SpaceX stock will join the NASDAQ 100 index on July 7th. Which means passive funds that track the index will be forced to buy billions of dollars worth of shares automatically. Put it together and the theme is ownership. Who owns the compute? Who owns the supply chain? Who owns the risk? The businesses that come out ahead this cycle will be the ones that own their foundation instead of renting it. That's your AI news for today from AI Command App.